Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Tuesday, May the 28th, 2017. My name is Doug McKay. I am the founder of Quantum Leap and your head moderator. Each day we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses for the day. This is a subscription room. If you're interested in checking us out, please send me an email at quantumleapfutures@gmail.com. There's no website. There's no blog. This is not a commercial venture. Each morning we do create those 4 hypotheses. This is not to hedge ourselves to say, hey, we got it right at the end of the day. This is to have a plan in place. We do not know what the market is going to do. We can only recognize what it's doing at the time and then find the plan that we've developed that best suits the market and then execute on that plan. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so yesterday, our main hypo was continuation lower. We were looking for a move up and then somewhere between the 24 and the 31, maybe into the 33s. We were looking for initiative sellers to move us down towards that that 19 area and then down towards the 12 and 9 area. Hypo 2 was a move down and then move up into the lower distribution, okay, and chop around here. Hypo 3 was the same thing, and then to fight the low and go sideways. And then Hypo 4 was a move up into a break above the 37 and then chop into the close between the 45 and the 39.50 in the undetermined fair value area. We actually got a combination of Hypo 3 and Hypo 4. We did get the move up, but we didn't quite get into the upper part of that distribution. They chopped it around the 39 and the 41. Overnight, though, we said because we closed near the high on a trend day that we were looking for continuation in the Globex. We got a bit of continuation. They got up to the 44 area, but they kind of failed after that. Taking a look at the news today. News, hold on one second. Getting a persistent cough. It's really bugging me. News today, we had U.S. goods trade balance came out better than expected. U.S. preliminary wholesale inventories came out a little bit worse than expected. 9 o'clock, we have S&P CS Composite 20-year HPI. Expected at 5.7. That should be out in about 10 minutes. And then the big news today, of course, will be the CB Consumer Confidence and Richmond Manufacturing. And then at 10:10, we have the Bank of Canada, Governor Pallot speaking. And then again, we have a Fed member speaking pretty much all day. And next week we get the Fed minutes. So the market's going to be listening to what each member has to say. So just watch those particular times. Taking a look at the macro to micro, I always like to start my day with the simple candlestick chart. I use a 9 EMA, a 20 SMA. What I'm looking for is I'm looking for slope of separation and the strength of the trend, where the trend is being challenged or violated on each time frame, so that I'm aware where we are in the trend and any trend changes that are coming in the larger time frames, and then I work my way down into the intraday. And on the monthly, multi-year upward trend, we got challenged at the end of 15, beginning of 16, then they took it back. Throughout 16, we trended up, and so far in the 2017, we've continued to trend, although right now we are below and showing some weakness on the weekly and on the daily. Our month open is 23.60.75. We could see our first negative month this year if we hold and close below that 2360.75. We still got 4 days left to go, and we'll have to see. But right now on the monthly, the trend doesn't even get come to get challenged until we get into the mid 2200s. So again, large time frame, the trend is up. On the weekly, we did have those one-time framing up, and then a couple of weeks ago we violated that one-time framing. That was the first clue, and the negative week we had that week, and that was where we violated the one-time framing up, giving us a clue that we could see a rollover. They tried to rally it the next week, and then they failed last week miserably, mostly on the Tuesday, the Take Back Tuesday trend day, that we had basically the full range of the week on that one day. Our current 20-period ATR is running at 40.50. It was at 40.80, and on that Tuesday we had a range day of 40.75 points. We are currently just below and trying to hold on to the 9 EMA, but we tested below it. We are testing the trend right now. We've lost some slope and separation. If we do not hold the 9 EMA, the target will be down here in the 22. I'm looking at the 2295s, but basically a test of the 2200s on the weekly. On the daily, you can see that we have rolled over. This is a wonderful example of a larger time frame FUBAR Mr. Sneaky Tech Gap. We get the strong trend up, good slope and separation. Then we get the blow-off day, put in the all-time high. That's our FUBAR. And then we get the inside day, which is the Mr. Sneaky. The FUBAR creates the technical gap, and what do? We come down and close that technical gap, come all the way down to the 20 SMA, then try to rally back up, can't get above the Mr. Sneaky, and then we failed again, and now we have a start of a downward trend on the daily. Going to the 4-hour, you can see that we tried to rally. Another good example of a FUBAR Mr. Sneaky Tech Gap. There's the FUBAR, there's the inside bar, there's the technical gap against the 9. We rallied back up. Okay, yesterday in the RTH, basically a trend day up in the RTH yesterday. Continuation as expected up into the 44s. I was expecting 45, didn't quite get there, and now they've rolled it back over, and we're below the 9 and the 20 with the possible start of a downward trend on the 4-hour. Going to the 1-hour, okay, you can see again FUBAR, Mr. Sneaky, technical gap, close the technical gap, continuation up, continue to the 44, fail at the 44 rollover, and possible start of a downward trend on the 1-hour. On the 30-minute, you see the acceleration on the 30-minute. We're getting slope and separation and looking for a continuation of a trend down. On the 15-minute, you see the same thing, continuation down, slope and separation, and on the 5-minute, the same thing. Now, I mentioned this yesterday, okay, and I'm going to mention it again today, that a lot of times when we see the market rolling over, okay, they'll start doing it in the Globex. And what you want to look for is you want to look for OTF participation, okay, and activity and range expansion in the Globex, okay. You know, usually you're averaging below 10 points in the Globex, time frame. When you see expansion happening, okay, this is a clue that the market is seeing a shift from one trend to the next trend. Even though we had the take back day yesterday, we're right back down. Europe took us down, okay, and we've created a very weak low down here at the 34.50. I'm looking for continuation, okay, to the downside today. We've got a double distribution with the LVN at 37.50. I'm watching that 31.75, the weak low from last week, and 37.50 is my next level. Anything above 37.50, then I'm looking for a move back up into that distribution zone again between the 39 and the 45s. But right now, we are seeing some weakness. So taking a look at the big picture, okay? And again, just to put this in context, we always want to have context. We have a large area of consolidation. We have this microcomposite that is created with a value area between the 66.25 and 49.50. The last price that they accepted and the most traded price in that balance area, 62. They break out a value, they gap up, they create the 3-day island top. They try to hold value up here in the 85, 86 area. They can't, they gap back down. Where do they come to? They come right to the last price accepted before the breakout, which is the 62, and then they break out of value again. They accept price higher outside of value, gap up, come right into the 3-day island top. They accept value at the 85, 86, and then we go into price discovery. Gap up, gap up, gap up. 2-day balance at the 19, okay, becomes a destination point that we're looking for. Continuation, 3-day balance around the 39, then we gap up, okay. We create this, this value area up here, okay, with the most traded price at the 59.50, 60 area. They put in the blow off top. They try to hold value. They can't. The take back day. Where do we come right back to? The first destination of balance, okay, and that microcomposite VPOC around the 39, 38 area, okay. They tried to hold value there, okay, and then they fell out of value, okay. In the Globex, we gap down. Where do we go to? We go right to the 19. Where do they find buyers? Where it all started after the gaps, and we rally back up. Now we get back up into the 39.40 area in this area of undetermined value. Now they're maturing this and they're finding value in around that 40.50 area. We said that would likely be where we would mature the auction to, and so far they tested the upper side, couldn't get up to the 45 CHN, and then overnight they take us back down, and we're coming down and we're testing the lower side of this value and having trouble holding value. So watch the 32.75. I'm actually watching the 31.75. If they can't hold that, look for them to move back down, okay, towards this 23.19, 23.20 area, and a continuation lower. If they can hold the 31.75, okay, they still haven't finished the work that they need to do, and we're likely to come up and chop around in this 39 to 45 area as we continue to accept price up here and hold value. So moving the taking the Globex now. Globex is going to be hard because of the fact that we've got news coming out in about 30 seconds, but we're creating this week low and we have 30 minutes to go, so we're likely to create a lower low, but right now we do have an overnight high at 44. Currently off of the low of 34.50, our 20-period daily ATR full session is expanding. Okay, we had compressed, we talked about that compression and getting our daily ATR average to range below 15, and that we were looking for it to go into price discovery on the compression. Now we're getting ATR range expansion. Our ATR is running at 1746 right now. So if we go 23, 34.50, which is likely to change, but 1746 on top of that, our daily upside ATR target is 2352. And that's right near, that's 3 ticks below that range high, okay, that we put in on the 24th. And off of the overnight high of 44, Our daily downside ATR target is 2650. And that keeps us inside of yesterday's range. There is a LVN here from yesterday. The value area means nothing yesterday, okay, because of the fact that we had a trend day. On trend days, you are not finding value, you are in price discovery. But we have a double distribution overnight with the LVN between the double distribution at 37.50. So we have to pay attention to that 37.50. Just above that, we have the naked close and the naked VPOC at 38 and 38.50. Okay, our overnight VPOC is not likely to change. Well, you know what? We're putting in some heavy volume here at 35, so we'll have to pay attention to this because we could get a shift of the VPOC. But right now, it's at 41, just below the range low. And that's all the information that we're really going to get. Inventory right now is net short, okay? It's pretty much, I'd say, close to about 75 to 80% net short right now in the Globex. So we have to pay attention to the overnight inventory. If we get above that 37, okay, and we're likely to get a short squeeze and a move up into the VPOC from overnight and a break of yesterday's high and back towards that 44.45. We still have some repair work to do up here, and we have range capabilities, okay, without violating the average true range on the day to get all the way back up into the 52s. So what am I looking at in terms of hypos? We're breaking down again, so my hypo, my primary hypo is going to remain the same. I'm looking for early responsive buying, a move up, okay, into the 39 to 40 area, 41, and then I'm looking for responsive sellers to step in here and take us back down, okay, towards that 31.75, chop there, and then push through down into the 26.50. It's Tuesday again, so we could be seeing a trend day, but I doubt we'll see a trend day considering that we trended up. We're likely to balance out today, okay, somewhere between the 45 and the 19 area. So I'm looking for a rotational day with a downside bias as my main hypothesis. My secondary hypothesis, we took back and we trended yesterday. So my secondary hypothesis is an open auction in range, a move down into the 31, hold the 31.75 area, okay, maybe a dip down a little bit lower, but finding responsive seller or buyers and then rotating up through to the 38.75, chopping between the 39 and the 44 and balancing out with late day probe up into take out that naked VPOC at 48. And that is my hypo 2. My hypo 3 is a open auction failure to break out of the 41 and then complete flush down towards a trend day down continuation towards the lower 2300s, targeting that 2309.75 and our key line in the sand down here at 12. We still have that gap zone. We have two gap zones below us that still need to be hit, and we're seeing weakness coming into the market, so we have to have a plan in place if we see failure and we start to see a trend day develop to the downside. And I would watch your 31 and your 26.50, your daily downside ATR target. If we get below that that average true range for the day, then you have to look for range expansion on the average true range and a trend day down. The fourth and final hypothesis is an open auction in range, a quick move up, break out of the range from yesterday, chop around between the 40 and the 45, and then get a another take back day and a push up into the 50s and testing the range high from the 24th, and then a late day probe back up into the weekly ATR range. Our upside weekly ATR off of that 1775 week low is all the way up here in the 50 and taking us right back into this, this balance, taking us right back into the balance that we broke out of, and this microcomposite VPOC around that 59 and a quarter, 59.50 area. So those are my four main hypotheses on the ES. Just moving over to gold. We come up, we hit our primary target. We've been talking about this target for days, okay, ever since we came up and accepted that price around the 27s. We've been talking about them and getting the continuation with the next big target being up here at the 57s. We're back up here. The 2-day balance, where is it? Right at the 57.90 area. This is no coincidence, gang. The market has memory. We've come up into an area of balance, prior balance. We moved from balance to imbalance, back to balance again. Now we've got buyers and sellers doing business here, okay, at an area of former price acceptance. So we have our former microcomposite VPOC. Now we have our 2-day VPOC. Up here, the overall balance that we created and the price that we accepted before the next leg up into the 57.90 is down here at 47.80. So key areas to watch. I'm still looking for balance to be accepted, and I'm looking for a rotational day again here in the gold, and with possible move up in to test that 61. A break of 61 breaks us out of that former microcomposite value area high at 60.70. We rejected it yesterday. Overnight, we're coming back up. If we break out of it, then I'm looking for a push up into the 63.70s. I'm not expecting a move above that or ability to hold above that yet. Okay, we've got to come up, test the upper side of the balance, then come back and accept the balance, and then move higher. That's why I'm looking for a rotation. Now, if we can't hold and accept this price again and make the move up into the 60, 61 area, possibly 64, then we don't have enough buyers yet. They've got to come back down and find where the buyers are going to step in. The first area you want to pay attention to is at 53. We talked about that 53 yesterday. It's the same thing. If we can't hold 53, they don't have enough buyers. They got to move down, and they've got to come lower, and they're likely to move down between the 47 and 50 area and find buyers back down here again. Pretty simple. Anything under 42 and the sellers have taken control, and we will move lower back towards the lower side of this value and probably back into the 50% of the significant breakout candle. So if we look at that, our high on this candle is 47.7. Our low on this candle is 26.6. And the 50% retracement of the significant breakout candle takes us right back down to that 37 area and the 39 area. See how it all works? It's not complicated if you think in terms of the auction and understand what the market is doing. It's moving up to advertise to the sellers, it's moving down to advertise to buyers, and it's going to move from balance to imbalance to balance again. Anyway, that's going to be it for the pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.